One last thing from the chapter is calculating the total asset turnover to evaluate how efficiently the company is using its assets. And the formula for the total asset turnover is net sales divided by average total assets. And we know you get the average total assets by taking the total assets at the beginning of the year, which is whatever we ended last year with, and then add this year's ending total assets, add that together, come to a subtotal, and divide by 2. Your average total assets should fall somewhere in between the beginning total assets and the ending total assets. And so the total asset turnover tells you how many times your sales cover your average total assets. So the higher the number, the better. And so here you can see Starbucks and Jack in the Box, and we can see Starbucks $1.22, 1.07. Another way you could look at it is for every dollar of assets, how many dollars of sales do you have? So we can see $1.22 of sales for Starbucks for every dollar of assets. Jack in the Box just has a little over $1.07 for every dollar in assets. And if we go back 1 or 2 years, right, they only had 85 cents for every dollar of total assets. Or you could say, I'm saying sales. Sales covered your average total assets less than 1 time, only 0.85. So 85 cents in sales for a dollar invested in assets, right? And so we can see Starbucks is doing much better, but when we compare it to 2 years ago, 1 year ago, we can see it's trending downward. So that is an area of concern. At least with Jack in the Box, we saw it increasing from last year to this year. And so this is just, as I said, giving us an idea on the effectiveness of our use of assets.